Hi dear traders! From the fundamental point of view, the situation stayed the same, with traders evaluating possible changes in the monetary policies of major central banks. This is what mainly shaped the market sentiment over the past trading week. The US dollar index, which demonstrates its value against the basket of 6 major currencies, lost 1.4% last week and approached the level of 102. So the greenback marked its third consecutive week of losses as the US Federal Reserve decided to pause its tightening cycle, while other major central banks kept raising rates. The US regulator hinted that it may increase the rate once again due to persistent inflation in the services sector. However, the market seems to have ignored this possibility. The euro traders are taking advantage of the weaker US dollar, so the euro-dollar pair has already reached its highest level since May 10th. On Thursday, the European Central Bank announced another rate hike of 25 basis points, bringing the Eurozone's key interest rate to 4%. ECB President Christine Lagarde said that the regulator was determined to continue monetary tightening at its next meeting. Besides, the ECB has downgraded the Eurozone's GDP growth, which is why the euro may lose its appeal among investors. Yet it seems that traders are mostly focused on interest rates rather than anything else. Apparently, this is where the British pound is getting its main support from. The pound-dollar pair has hit its highest level since April 2022. The Bank of England is likely to lift the key rate once again at its monetary policy meeting this Thursday. Recent economic data from the UK revealed an increase in wages and an unexpected expansion of the economy, which is another factor in favor of further monetary tightening. Meanwhile, the Bank of Japan left its monetary policy unchanged at its meeting last Friday. The key rate remained at the level of minus 0.10%, which is done to support fragile economic recovery. The Japanese yen is the only currency the US dollar can compete with. However, last week the yen dropped to its lowest level in 7 months. Gold was trading at the level where it closed the previous week. The sentiment in the gold market is mainly affected by the news about a possible change in interest rates. Gold and government bonds are two alternative stores of value. If the key rate rises, government bond yields also go up. Therefore, any speculation about a rate increase puts pressure on gold prices. As we can see on the chart, traders seem to be evaluating forecasts about the Fed rate. In the energy market, oil has gained value. Despite the threat of weak consumption amid global economic uncertainty, Brent crude managed to reach $76 per barrel. Oil prices were driven by the news that China has lowered their rates to support its economic recovery. For your reference, China is the largest oil importer in the world. At the same time, oil supply will stay limited as Saudi Arabia has announced its decision to cut output by 1 million barrels per day. These are the trends of the last trading week. Stay tuned, do not miss our daily news reports, and trade with profit. See you!